The SEC is coming after all of crypto.
Weak regulators spread fear, and strong regulators spread opportunity. I think we've got a real problem because the SEC has been spreading fear.
Remember, Gary Gensler says that the law is crystal clear. Well, if the law is crystal clear, as he suggests, then he certainly could answer whether or not the second largest cryptocurrency in the world is a security.
Is Ether a commodity or a security?
Without speaking to anyone.
I know you've repeatedly said you're not going to speak to one, except you've spoken to one, Bitcoin.
Where are the notes of Gary Gensler, who met with this guy twice? Sam Bankman-Fried gave $10 million to the administration for the purpose of access.
They still have a strong hand. If they win, that ripples throughout the industry.
And that's what I was getting at. If XRP is
Do you think they're going to win?
No, I think the SEC is going to lose at summary judgment because of the theory that they went with.
I think the SEC is going to win. And I'll tell you, it's going to be a bad day for crypto if they win.
Okay, we're going to put that dinner on that? Steak, you got it.
Ripple didn't violate securities by selling XRP on public exchanges was the ruling.
Today is arguably the best day in crypto.
XRP just won in their case against the SEC. The SEC losing the biggest case that's been running for years, deeming that XRP and the trades and transactions that have occurred are not securities.
December 22nd, 2020, right before Christmas, and the goddamn SEC is suing me. Out of nowhere comes a ray of sunshine, and that sunshine is named John Deaton. This village beat the bully.
We are in it till the end.
So you'd take it to SCOTUS?
100%.
Welcome to Crypto Law TV. I'm John Deaton, your host and the founder. And Happy New Year. This is our first episode of the new year. I want to thank my crypto staff for putting that together. That was a surprise. I didn't know that that was going to happen. They told me that they had a surprise for me. So thank you. Now, on to the new year. Before that, though, I want everyone to know that we have a new initiative at Crypto Law and our Connect to Congress initiative. When you go to the Crypto Law site, this is what pops up. And it takes you 30 seconds. And what it's doing, it's going to send an immediate message to your senators and your representatives in Congress that says, issue that subpoena. Chairman McHenry, issue it. Let's stop talking about it. Let's stop threatening. Issue the damn thing. It is time. And so that's what it does. Let's keep the pressure on them. They pay attention to those posts. We've done over 60,000 of these messages, and we can accomplish that again. With that said, I want to bring on my guest because we got big news expected this week. We have welcome back to Quinn Thompson. How you doing, brother?
Great to be here, John. And you know that video got me pretty pumped up. We got a big day tomorrow, so
yeah. And I want to
nice work on that.
Thank you. I want to welcome Scott Johnsson. Welcome, first time on the show, right, Scott?
That's right, John. Thanks for having me on. Appreciate it.
Thank you guys so much for joining us. Everybody knows Quinn. He's back. Scott currently works at the law firm Davis Polk in their finance division and is the general counsel for Van Buren Capital. In other words, I got two experts who are going to talk about things, have a lot more knowledge than me. Everybody for months has been talking about the Spot Bitcoin ETF. Quinn and I discussed it, a couple months ago, and here we are. So first question, guys, I'll start with you, Scott, since you're the first time on the show, and then I'm going to go right to you, Quinn. I think we need to begin by acknowledging how and why the SEC is on the brink, apparently, of approving a Spot Bitcoin ETF. So the question is, was it always inevitable? What we're about to witness in the next couple of days, if it happens, and we're going to talk about that chance that it might not, but if it does, was this inevitable, guys? Scott?
No, certainly not. I mean, in my view, there's basically like a 4-step ratchet that's happened in the last few years. I mean, basically since CME futures for Bitcoin first launched back in the end of 2017. And that was really the first step. Now, some people could argue that it's inevitable after that first step. But really, you've seen steps along the way that were really required to get to this point. And so basically, after CME futures launched, that really kind of sets a regulatory designation with these assets being what are essentially non-security commodities. And then you get to the point where we get a futures ETF under the 40 Act. And then shortly after that, we get it under the 33 Act, going through this 19b4 process. And now, relying upon these prior steps, you get to spot. And it's all kind of relied upon this kind of scaffolding. But at any point, I mean, really, and at almost every point, the SEC delayed and kind of did what they could to kind of push it out. But, you know, it was almost inevitable between each of those steps. But certainly, it's been a process and a difficult process at that. I mean, we had to go through the DC circuit with Grayscale. And that was really a necessary part of the process, and really was never truly inevitable in my mind until Grayscale ultimately prevailed at the DC circuit. So
no, that's a great point, Quinn. If Grayscale or someone else doesn't take the step of suing the SEC, are we arriving to this day today, or tomorrow, or this week?
Yeah, I mean, at some point, but definitely not with the fire lit under the SEC that win provided. I think it can't be understated, although there's quite a few ongoing things with the whole DCG umbrella, the Grayscale movement, for all its obstacles that it's presented the industry has been a driving force behind this. And I think a couple of the things I find most interesting is this is the first big, let's call it traditional product launch of crypto that's not happening at the Pico top. So as Scott mentioned, we had the futures launch at the Pico top in 17. That's when, Goldman and a lot of the banks decided to start trading for the first time. We had the Bitcoin futures launch at the Pico top in 21. And, knock on wood, I think we're decently constructive that this is not that. Maybe it's a local top, but that just bodes, really well for, I think, the industry headed into what is supposed to be a fairly supportive macro environment in 2024, and could mean future positive tailwinds within regulation and SEC, whether that's more IPOs, crypto companies going public. We've seen some headlines around Circle. So I'm pretty excited. Other ETFs like Ethereum, what this is going to mean for the industry, over a 6 and 12 month basis.
Scott, as a general counsel, when you see litigation at first, it seems like a negative, right? So obviously the Ripple case, it was bad news, but a lot of people in hindsight say, well, since we're in this regulation by enforcement era, it probably was good to get out of the way and get the ruling. And so I was someone who thought the Spot ETF should have been approved under Jay Clayton. And so I guess the question is, do you think that, looking back, that it's good the way it happened as far as demand or anticipation? How do you view that?
It's a mixed blessing, I think, in terms of how the process played out. I think the way that it happened, it's actually important for, at least for ETH in the future, and maybe future products that might try to go this route, that there is this trodden path that's been created that is relying upon, a court ruling that is basically binding the SEC to a certain path as well. And to the extent that the SEC was just kind of making these decisions without that sort of guidance from a court, I think that would not be as ideal. I think that there's some really important precedent that was created at the DC circuit that's really kind of goes beyond even just the ETF conversation in terms of the SEC making decisions generally about crypto. So I think that's good. I think you're right. It should have happened earlier. It didn't. So I'm happy that we're finally at that point now. The market's obviously matured greatly since Clayton had stepped down. But it has certainly been a mixed blessing.
Quinn, and this is also to you, Scott, but January 10th is the SEC's deadline to take action on ARC21 shares application. And it looks like sources are that final approval is here and it's coming. And so to each one of you, starting with you, Quinn, what do you think happens tomorrow?
Yeah, it surely seems like, just from all the scoops and even public appearances in the case of Jan van Eck, that Thursday is kind of agreed upon the go live trading date, which is quite a quick turnaround relative to normal processes. But it does seem like that will be the case. I've heard that from a number of places and issuers across the board. And my guess then is to give ample notice that the approval either comes after market today or hopefully, tomorrow morning, to give people 24 hours. But I do expect trading this week, and approval then obviously has to come before.
Right. Yeah.
Understood. Scott, go ahead. What's your take?
Yeah. Well, I guess just to maybe take one quick step back. I mean, there's only one thing that absolutely needs to happen tomorrow. So ARC has a deadline. It's the end of their 19B4 process. SEC either has to approve or deny, or if they do nothing, then it's going to be deemed to be approved. Right. So that is the only thing that needs to happen. Everyone is looking at all the other facts and circumstances that we've seen from the SEC for the past couple months and weeks to just see, okay, well, what else is going to happen? And I think Quinn is exactly right. I mean, look, we've seen for weeks and months now, the SEC has been working on registration statements that are not required to be done by tomorrow, but they have been working diligently with these issuers. I mean, if you look back at 2022, the comparison is with these futures ETFs that launched under a 19B4 process. SEC didn't even give the first round of comments until after these 19B4s were issued. So that to me tells me that the SEC wants all this to happen extremely quickly, which I think everyone in the industry and all the rumors seem to support. So based on those rumors, like Quinn is saying, I mean, it sounds like we'll get approval orders for all of these outstanding ones, at least the 11, maybe outside of like a Hashdex, which is not quite the same as these outright spot products, and that they'll begin trading on Thursday, which is extremely quick turnaround. I've never quite seen anything quite like that. You'll see approval orders. My guess is that they're aftermarket close, but there's certainly nothing that requires that to happen. And then there's a little bit of a dance that happens between getting these registration statements effective, which is, essentially there's a request by these issuers to accelerate the timeline that otherwise would be applicable to have their registration statements go effective. And then the SEC basically gives a notice, says, okay, yes, we accept your request, and we're going to notify you that your registration statement is effective. And then they'll go trade, right? So there's a little bit of a dance that happens there. Normally it does not happen all on the same day. Right. It sounds like that's what's going to happen, though.
Well, Gary Gensler, go ahead, Quinn.
I was just going to ask if we don't get anything before market close tomorrow, do you suspect, because people are probably going to be one of this, do you suspect they could approve post-market close or notify and start trading then right after the next day on the open?
Yeah, my guess is that the approval orders happen after market close. So that's, and then Edgar is open effective for that day until 5:30. So my guess is almost all of it happens between 4 and 5:30. That's not to say that it has to happen. They could give the approval orders during the middle of the day, and then the rest of it kind of just happens in turn then. But that's my guess. But we'll see ultimately.
Quinn, obviously Gary Gensler has said there's 8 to 10 or a dozen of these ETFs before the commission. Scott's talking about sort of a mass approval, if I use that phrase. Do you agree that we're going to see not just ARC, but multiple approvals all at once?
Yeah, I think so. And all the indications consistently support that with every issuer coming back to the table, making the same slight revisions, adding the fees, and updating based on SEC comments. So definitely think that's going to be the case. We saw that with the ETH futures as well, where they didn't give the upper hand to anybody, even though there were, inevitably people that filed to launch this first. And, the interesting one there obviously being GBTC and Grayscale, which again, similarly all signs point that it will be a go alongside the rest on day one. So should be pretty exciting trying to manage both new inflows to the other vehicles and then, also monitoring if there's any outflows on that GBTC side.
Yeah, I've heard, scuttlebutt rumors, whatever you want to say, that it's possible that GBTC and Grayscale might be delayed versus the others. Scott, any thoughts on that? Do you think that's unlikely?
I do think it's unlikely. I mean, look, Grayscale GBTC needs essentially the same things as the other ones. They need 19B4 approval, which they have had their 19B4 outstanding since 2021 at this point, or prior to the litigation. They need an effective registration statement, which by all appearances they will have along with everyone else. I don't see any reason why it would be distinct. And they need something what is essentially a Reg M exemption, which deals with buying and trading your own securities. Most ETFs just get this by virtue of launching as an ETF. They are kind of in a weird position, but ultimately, looking away from what's required by the law, I mean, just optically, I don't see what benefit it would have for the SEC to single them out. I mean, they would look terrible, and they've already kind of been beaten over the head by Grayscale's lawyers already. So it just doesn't make sense to me from a practical perspective as it is, and just from legal perspective, I just don't see it happening. So.
Well, listen, it would obviously look punitive on its face because they were the ones that sued the SEC and then they're being punished. It plays into that perception that the incumbents always get the favor and the disruptor, is going to get penalized. But I agree with you. I would just, every time I say I'll be shocked, they end up shocking me, but I don't see that happening. But, you do see Kathy Wood sold her GBTC. By the way, full disclosure, I own GBTC. And so do you think we're going to see, because on Twitter, or X, I should say, we see these comments that there's going to be selling pressure on GBTC once approval. What do you think of that, Quinn? And then
yeah,
Scott.
I mean, I do. I mean, look, they're going to market with $26-ish billion of assets, and they're going to have the highest fee by like a factor of 3 or so. I mean, look, it's highly likely that they're going to see outflows. I think that they're probably in a position of, we have a ton of assets. We want to keep the fee as high as we can and minimize the amount of declines in AUM, and we need to figure out what the level of fee is. I think that everyone is expecting declines there. I mean, Kathy's launching a competing product. To me, it doesn't really surprise me. And the discount has closed immensely since she's held it. So it doesn't surprise me too much that she's sold her positions. I mean, and obviously there's rumors, but honestly, there's been rumors about everything the whole way. And I just haven't seen any real logic to them at this point. So
any thoughts on that, Quinn?
Yeah, I agree. I think that, the biggest thing is a little bit of a gamble here, probably, or a calculated gamble from Grayscale. They're probably playing the game where hopefully for them, people are willing to eat the, significantly higher fee in order to not recognize capital gains tax on a sale and transfer into a competing product. But like Scott said, just optically, it can leave a pretty poor taste in consumers' mouths, particularly when there's 6 or 7 other ETFs waiving the fee for the first 1 to 5 billion in assets, and after that, it's kind of 20 to 40 basis points. So we'll see how it plays out. I do, as Scott mentioned, expect decent outflows though as well.
Okay, listen, I want to bring up a post by Perry Ann Boring. I have to just address this, because there are people out there, and not necessarily Perry Ann. This was just more of her being worried based on SEC's previous conduct. But guys, I've said that if this approval doesn't happen, it would be the greatest regulatory rug pull in SEC history. And so I have to ask you, what are the odds that the SEC doesn't approve anything this week?
I don't know what the number is. I don't really. Maybe if COVID 2.0 happens tonight and the government gets shut down between now and then, maybe something like that could delay it or prevent it. But rug pull would be a good term. I don't know what else to call it. It's going to happen. Very, very unlikely it doesn't.
Scott, what do you think?
Yeah, no, I agree 100%. I mean, it's super long tail risk at this point. I mean, everything we've seen indicates that they're trying to approve and launch all of these at the same time. It would be colossal waste of both SEC resources and all of these issuers resources to rug at this point, and like strange theories about like building a good fact pattern to deny just seems like completely outlandish to me.
Yeah.
It's like, I mean, look, if Biden calls Gensler tonight at 9 p.m. and says no go or something, I mean, I guess that's the only way I could really see it happening, and that would cause like a catastrophe at the SEC based on what they've been doing, and everyone would be in court the next day. I just don't see
Scott. I hate to correct my guess, but I think Biden would be asleep and it would be Warren calling.
All right, I'll accept that correction.
All right, guys, listen. Listen. They already been found arbitrary and capricious. I don't know what standard. Maybe you do, Scott, as general counsel, but I don't know what standard's above arbitrary and capricious as far as if there is one. But it would just be, a scenario that I also agree with you just isn't going to happen. But we do see undercutting, almost like this fee war that's going on. ARC appears to be the lowest at 0.25% after its waiver period. Could you briefly explain this fees war and what it means for consumers that we're witnessing?
Yeah, for sure. I mean, it's absolutely fantastic for, not that anyone chooses to invest in Bitcoin based on what the fee it is to acquire, but around the edges, it's helpful, and I think it goes to show the full on blitz of these asset managers to accumulate in the early days, and I think it was Nick Carter on Twitter who mentioned, BlackRock and Bitwise and all these issuers aren't coming in with these low ball feed numbers expecting 50 or 100 million of assets, right? These vehicles are very, very low margin. Obviously, they have existing businesses to support their operations, but they're running at this hard with the expectations that if they win, they will be seeing tens of billions of dollars in assets over a period of time. So what it ultimately ends up being for the consumer is actually a cheaper way to access Bitcoin than ever before. You look at exchanges, mainly here in the U.S., Coinbase or Kraken, and just singular trades cost anywhere from 50 to 250 basis points to buy and sell, and that's each way. So I think it's great. It's a kind of awesome olive branch to be extending to newcomers to the space, and I think I might have mentioned this last time, but there will be a couple of these issuers who were really doing God's work by marketing, by pushing the SEC, moving everything forward, but ultimately will not accumulate enough assets to make the product viable to sustain. And I do expect out of the 12-ish, probably half end up closing their products by year end. But we owe a lot of gratitude to those folks, and they've helped push things forward.
How does the waiver period impact inflows, if at all? Does that come into play at all as far as short-term inflows?
Yeah, probably not too much. I think it's more of an optics thing than anything to show people, look, we're serious. We're going to play ball. At the end of the day, you're investing in Bitcoin for the potential upside of multiples or whatever it may be. But I don't think 25 bips, 50 bips moves the needle here and there. So
okay.
it probably doesn't matter too much, but it is a very good gesture. Let's put it at worst.
All right, Scott, listen, Caitlin Long tweeted, when fees are lower than cost, please ask yourself how the asset manager is making money managing the fund. With no fee funds, the answer is usually securities lending, a practice that can pose a lot of hidden risk to investors. And so that kind of piqued my interest. And so I'll start with you, Scott. What's really going on here, if you know?
Yeah, I mean, I'm not really following, I guess, the argument here. I mean, the underlying isn't securities; these are, non-security commodities, or Bitcoin specifically. It's a grantor trust, and as far as I'm aware, that these ETFs are not permitted to lend these assets out. Specifically, I mean, look, the registration statements make that clear. I think by law they can, even if they wanted to.
Okay.
And these are giant issue. I mean, BlackRock is not going to be violating the law by lending these assets out, and none of the registration statements permit this activity. In fact, they specifically say that they will not be doing this type of activity. And so I don't know, it just seems a bit of a red herring. I'm not really think that this is an issue to be concerned about.
Quinn, do you have any disagreement? Do you think there's any chance of the underlying asset being lended out?
Yeah, I think there's a cohort of the Bitcoin community, and I'm not sure if Caitlin actually falls into that or not. I'm not as close to her specific views, but I do think there's some hesitation from some folks, more deeper in the community who are saying, hey, look, the introduction of these large institutions accumulating large swaths of Bitcoin could be a long-term negative. Say ultimately 5 or 10% wound up in ETF vehicles and were passively controlled by large centralized institutions. What's that mean for the safety, security, and decentralization of the network? I think there's some merit to the argument, but at the end of the day, I'm of the view that for any asset class to succeed and go mainstream and you need that regulatory stamp of approval. You can't operate in the shadows forever. Otherwise, the technology just by definition isn't going to be adopted by mass amounts of people. So it's a little bit of a scare tactic in my opinion, but I think there's better ways to put it. Because ultimately at the end of the day, this is a huge win for crypto and Bitcoin that this bridge is being created. And I think it should be celebrated more than, looked down upon.
Oh, no, you bring up a perfect segue, which is, adoption can't happen unless there's regulatory clarity. And sometimes I get pinged as someone who's anti-regulation because of suing the SEC and whatnot. And I've been someone who's saying, no, we need smart, tailored regulation in order for us to move forward. And so, Scott, how do you think this Spot ETF approval affects crypto legislation? You brought up ETH, for example, and there's the ETH futures. I'm assuming that as soon as this is approved, we're going to see a push by Larry Fink and the rest for the ETH Spot ETF. And, if I'm an attorney arguing for them, I'd say the same roadmap applies to ETH as it does Bitcoin. And if you don't approve it, we'll sue you like Grayscale. And that the same argument applies. You tell me what your thoughts are.
Yeah, no, I mean, look, I think on its own, the Bitcoin Spot ETF, at least in the short term, doesn't have a huge impact on regulation and legislation. I mean, look, the SEC is really, in recent history, not taken the position that Bitcoin is a security. I mean, I think if we recall prior to like Coinbase being sued and receiving their Wells notice, the SEC was telling them, listen, we won't sue you if your only asset that you're trading is Bitcoin. As far as I can tell, the regulatory apparatus doesn't really have a big problem with Bitcoin. And so spot product isn't that surprising that we ultimately got here. And so I think the biggest issues that are affecting the space ultimately aren't impacted too much. I do think, to your point, when we get to the big ETH question, and I think the first deadline is in May of this year, that starts to open up a bigger question because, ETH is much more comparable to a lot of the assets that the SEC is enforcing against Coinbase and Binance. I mean, look, there's an ETH foundation, there's like identifiable devs that first initiated the asset and the protocol. And so there's a lot of comparisons to like Solana or other assets that are ultimately being alleged to be securities by the SEC. And then there's, I think you're right that by following the path that we're at, I mean, look, there's a CME futures market for ETH right now. Right. Those futures contracts are listed as non-security commodities under that. Right. There's an ETH futures ETF under the 40 Act. It's a different process than what we're seeing under the 33 Act for spot product for Bitcoin. But I mean, look, you get to that point where you have a futures, you can have so Grayscale is actually doing something interesting here. They're applying both as a 33 Act and as a 40 Act issuer for a spot a 40 Act futures product and a 33 Act spot product. And so that kind of, they're hoping they won't have to sue the SEC again, but it looks like the threat is there implicit, even though this would be like a failed product immediately because no one's really interested in futures products anymore. But they're looking to create a basis where they can say to the SEC, listen, if you're not going to approve the spot product, we'll do the same process that we went through with Bitcoin. We'll sue you again. DC Circuit was like terrible result for the SEC. Do you want to do that again? Right. And then so ultimately what happens with regulation if a spot ETH product comes to market? I mean, look, I think it's difficult to distinguish between ETH and a lot of these other assets that are alleged securities. I think if you can make the argument that these are not distinguishable in a real sense under Howey, and courts start ruling that way, I think everything kind of blows up for a lot of these regulatory positions, at least from the SEC's perspective. And so that's, I think, the biggest question right now. There's obviously a lot of rulemaking around, brokers and DeFi and everything else, which might be less impacted by such a thing. But, I think if things are looking like, okay, these are clearly not securities, it applies beyond ETH, then things get pretty interesting pretty quick.
Yeah, listen, no one can take issue with what you said, whether they think ETH is a security or you can't compare it to Solana or whatever. The argument is there. And when the chairperson, and my staff had it in that video, when the SEC chair Gensler won't come out and say that ETH is not a security, it makes it interesting. Quinn, any thoughts on that issue where, ETH moving forward as the next step?
Yeah, I have a lot less depth than Scott on this more legalese topic, and so defer there. It seems to me, everything lines up for an ETH ETF as well. I guess my question for Scott is, so do we just need to get every coin listed approved by CFTC? We just go this backdoor route.
I mean, look, I think the two CME markets were under Trump in 2017. And technically it was under Biden, but it was like the first couple months before Gensler was acting as chair. And I think if he started a couple months earlier, he might have been able to stop the ETH CME futures. But I think everyone is aware of the game now. It's going to be very difficult to get any other asset to be listed on one of these large designated contract markets like the CME. So my view is that it's unlikely that we're going to see another spotted product outside of Bitcoin and ETH. Maybe Ripple, to be honest, because they have a favorable court ruling. Right. But that's like the closest one, to be honest. And I'm very skeptical of that. On the ETH side, I'm not of the view that it's slam dunk. There's some differences between where Bitcoin's at and the fact pattern, where I'm a more likely than not kind of guy that the ETH spot happens, but certainly not like a 90% kind of guy.
Yeah, you make a great point. Obviously, XRP traded on exchanges has, at least for now, legal clarity that it is not a security. So that's interesting. Here's my point, and then we're going to wrap up. But you have this approval coming. We all expect it on the spot ETF. Yet, the reason I'm bringing up legislation and the impact that the ETF's approval could have on it is you have Senator Warren's bill, which is a de facto ban of Bitcoin and self-custody, and 20% of the Senate allegedly is on board. And so do you see a problem reconciling those two things, or are they just separate and I'm conflating the two?
It's certainly an interesting question. I mean, look, could a Bitcoin spot ETF still trade if you are not allowed to self-custody and it's really difficult to transfer on the network? I mean, maybe it's just kind of sitting on exchange wallets and that's the only way to really trade it. So maybe there's not a contradiction, but certainly to your point more broadly, I think, if there's more investors and there's more people invested in the space, either through their businesses because they're authorized participants, broker dealers, custodians, whatever, there's more investment in terms of the outcome of legislation from traditional finance, there will certainly be more pushback for the sort of draconian rules that Warren's trying to push through. So I do think that it helps in that regard, even if it's not necessarily completely contradicting.
Okay. Hey, guys, listen, we're up to time. Last question. What do you think is the SEC's end game with crypto this year? And we'll start with you, Quinn. From a markets perspective, what's your viewpoint?
Markets, I think, are constructive on a longer term, 2024 full year basis for crypto. I think Q1 could be bumpy. It's the classic big event that a lot of people have gotten exposure already through other assets or directly through Bitcoin. So, you're going to need to see a lot of flows to live up to that hype and expectation. I also think relative to Q4, the macro picture is a little murkier. I think ultimately the Fed will be forced into a position of easing or relaxing their tightening quite soon here, just given some of the liquidity constraints on the horizon. But ultimately on the SEC side, I actually think one of the biggest upside potential surprise catalysts for crypto is November and the election. And I think that will come over time. We're still ways out, but it's not just crypto that's pretty, has a bone to pick with the SEC. We're seeing even a lot of the other traditional finance investors, Ken Griffin, Citadel, everyone's kind of got a bone to pick with the SEC for a variety of reasons, and their lack of commerciality and impeding private enterprise here. So I think a big potential upside risk for the industry would be the removal of Gensler and a new administration altogether, which you could start to see some of these more positive events start to occur.
If we were on Spaces, you'd be seeing a bunch 100s right now. Scott,
it can't come soon enough.
Yeah, Scott, let me ask you this, and then we're really wrapping it up. No one follows me for financial advice, nor should they. But I have said, with this ETF approval, with the halving in April, and then an election year where the party that is the incumbent party is going to, lower interest rates, quantitative easing, that's sort of like a perfect storm for price appreciation. And so to Quinn and you, any comments on that? And finally, Scott, the question about where do you see the year ending with crypto policy?
Yeah, I agree with Quinn completely. And to the 3 points you mentioned between ETF, you'll start to see, just natural flows into it. The first weeks and maybe even months are just going to be kind of, I don't know how it goes, but I think ultimately things settle down. And then as allocations start to increase, you'll see those flows just naturally and steadily appreciate. And then obviously everyone kind of looks to it. Who knows if it's priced in or not, whatever. But then you look at the election. By betting odds, Trump's looking to be favored at the moment. Obviously, we're still, 9 or 10 months out at this point. So things can change. But I think, it's kind of a natural segue where in a year where I think people kind of expect at least some level of price appreciation, that you go into an election period where there's a pretty clear indication that one party or at least one administration is particularly against a specific asset class, and people will start to view that as kind of a turning point of the market. And so you'll see a lot of pressure and pushing of a narrative that one outcome is better than another. So I think that'll be super interesting to see. I think at that point, there will be a lot of more tourists as well that will also be kind of introduced to this kind of dynamic, which will make that even more interesting. So look, as the entire Biden admin, they kind of shot their shot the last year of this, or 2023 was the most, and this immediately after the midterms, you saw, the colloquial Operation Choke Point 2.0 type of actions. All of that was done within the space of a year. And now you're kind of seeing, obviously all the rulemaking and stuff is still kind of ongoing, but, I don't think we're going to see much more action, especially since Biden's not looking particularly great polling wise. That's going to really antagonize the space even more just because it's election year naturally. And they kind of did what they wanted to do last year. So it'll be interesting to see whether you see a bit of a softening. I think the administration might try to sell this ETF approval as a bit of a softening. I think that's a complete lie. In my view, I think that they were truly forced in every sense of the word. But that won't mean that they won't try to change that narrative. So I think it'll be really interesting to see how far they push the rules that they've kind of promulgated already this year, and what they kind of do leading up to the election, especially if Biden is not seen as a front runner.
Quinn, I have been hodling from 7,500 right all the way up to 69,000 or whatever, all the way back to 16,000. And people like me going to be happy this time next year, at the end of this year? What do you think? That's the last question.
Yeah. Most people should not be, day trading this stuff and take more of a passive, dollar cost average over time approach. On that side of things, if I had some money to deploy, I'm not sure I would do it all right now. I think, as I mentioned, I think Q1 you could see some obstacles there, but very, very, very constructive on a 6 to 12 month basis beyond this date. And so, I think that additional momentum behind the industry, rising prices, rising adoption, rising users, more companies picking it up, is all just going to add increased pressure on the regulatory side to get this right. And I look forward to 2024 very much more than last 2 years coming into Jan.
All right, guys. Thanks. Hey, Happy New Year to both of you. I appreciate your time so much. I know the audience does as well. And I'm sure I'll talk to you soon. All right.
Thank you.
Thanks,
See you
guys.
next week.
Take care.